October 26th. Do or die for Facebook, Meta. I've analyzed this company a lot, and short answer, folks, is I believe this company is undervalued. Now, here's the thing, folks. I'm going to load this up. Stock research app here. Now, if you want to get your hands on the software, I'll tell you about that in a little bit. But the important thing is this. This company has been beaten down from the highs of 359 or 353 on the, well, yeah, 353 in the last 52 weeks, down to a low of 122. We are now currently sitting at $130 a share. And from February, take a look at that. You can see the huge drop right there. We'll just zoom in here. Look at that drop from February 22nd. Boom. They missed earnings, and this stock price has been going down, 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 down. Now, here's the thing with Facebook Meta that I find that's interesting. They are a huge cash flow positive company. However, they have been struck by not making as much money with advertising, if you know the scoop. But they've been focused in on this whole metaverse platform, and I strongly believe in this platform in the future that it's going to connect a lot more people together. It's inevitable. I've brought this up in numerous videos before that my age group, my demographic, we gravitate towards, let's say, Instagram and the original, obviously, Facebook platform. Like, we have, pretty much everybody has that platform, Facebook and Instagram. But the younger generation, the Gen Zs of the world, Facebook is something that they don't really gravitate to because their parents are most likely on Facebook. It's the old person app, right? So they gravitate towards other social media sites like Instagram is popular. Snapchat is still popular amongst that crowd. Now, Metaverse is going to be able to capture, or I think that what they're trying to do is regain that demographic that are not part of the Facebook world. And on top of that, they are still reaching out to further developing countries that are now getting online. They're able to get onto this Facebook platform. Remember, 1 in 3 people, and this is the statistic, 1 in 3 people own a Meta product. Now, I'm bringing all these points up because why? Why am I bringing these points up? Because I can live with the fact that if earnings go down while in this Wednesday coming up, I'm totally fine with that because I already know that this company's stock price is undervalued. And with inflation rising, you have to find companies that are able to weather the storm. For the last several years, it has been phenomenal for Facebook. It's been phenomenal for all the FANG stocks. Facebook, Apple, Amazon, Netflix, Google. You couldn't go wrong because the economy was good. The economy was strong, and these companies have just been crushing earnings and earnings and earnings. Now, here's the thing, folks. When good times are happening, everybody makes money. Now, so what really makes a strong investor is what happens during the bad times. During the bad times, this is where the real investors shine. This is where you can find these phenomenal businesses at great prices. Look at this, folks. Like, at a comparison, just take a look. With a PE of trailing 12 months at 10.45, we are reporting our earnings per share being 12.20, where on average, we have a 26.58 PE ratio, and our 5-year average EPS is 8.77. To me, this is important because you have a low PE ratio with a higher EPS compared to our 5-year averages. These are just some of the metrics I like to look at when comparing and finding these phenomenal companies. Like, we are ranking this company a 9 out of 10. Now, this software here takes a look at the company's financial statements and grades it out of 10 based off of certain numeric metrics that they are reaching. So like our ROE, our return on equity, is high. It's 24%, where we want to find companies to have 15% or higher. But more importantly, folks, the cash flow. That is the blood of the business. You go into Facebook, Meta, however you want to look at it, and just year over year, 2012, 377 million, and slowly, it's been creeping up. I don't see this company, let's say, slowing down per se. It might get dented a little bit, but I don't see this company slowing down. I think people still want the good times to keep on rolling with how they've been growing in the past. And now that for the next couple of years, they won't probably grow as quickly due to the fact that inflation's up. Due to the fact that, let's say now here in Canada, they had discussions on Friday about paying the different news outlets for, let's say, sharing news. So they want to have, like, let's say, a revenue share. When you, let's say you find an article, like over here we have CTV or Global News. You find an article that you want to share on Facebook. Well, Facebook makes money off of that, right? And here in Canada, they're saying, well, no, you got to just share some of that revenue with the people you're taking it from. And in one sense, I see how it's fair, but I'm gonna tell you right now, Facebook as a platform, in terms of reaching people, it is easier to share a thing on Facebook than it is to just get the link on your own from, let's say, Global News. Unless you're a subscriber, like myself, I can just blast out a news article to, let's say, all my friends, and that's quicker than telling everybody, hey, you should go to this website and just look up this story. No, I got the story, send it out, and away you go. That's far from the point. The point is this, as I went on this little tangent. The point is this. If you are invested into Facebook right now, and Wednesday comes along, they miss earnings, stock price goes down, this is an excellent opportunity to buy this company further. And that's something I'm going to potentially do. I'm going to probably DCA into this company further and pick up some more shares, because this is essentially a speed bump. And this is a thing that I noticed with Facebook. Whenever there's any kind of controversy, this company is usually in the center of it, and they always bounce back. And look, you can see here in 2018, let's see if I could just zoom in here. Boom. I'm pretty sure this is when they were in court for their whole advertising thing. But look, this company just drops down and then goes, and then after just keeps on trucking away. COVID happens, boom, and then they just keep on trucking away. And the same thing. This company is so cash positive, they're gonna weather the storm, no problem. I'm gonna make a follow-up video come this Wednesday, and then once the new stock price comes out, because I guarantee this price might go lower. This is a decent price. And I'll, like, you know what, I'm gonna just run the numbers really quickly in here just to see like what we should be paying for this company today. So stand by, I'm gonna fill these lovely boxes and then we can talk about it. And guys, if you're looking to get this software here, just head over to my site, leodeleo.com. You get a 7-day free trial. And this site here gives you access to all 10 years of financial data, as well as probably the most important section of this software, which I'm going to show you right now, and that's the price analysis section, where it gives you the opportunity to find the intrinsic value of any company you can think of. So in the terms of Facebook, and also if you like the video, hit that like button and subscribe button. It means a lot to me. Take a look at this. So let's say in this software here, with the price analysis section, I try to stay conservative with my numbers if you're new to the channel. And this is a 20-year analysis. I want to do 10 years. Sorry, so let me click calculate again. It's going to run through all these numbers again. But basically, I'm putting numbers in that I believe the revenue should grow over the next 10 years. And I'm trying to be as conservative as possible. See, in the last 1, 5 year, and 10 years, there's some healthy numbers here, 33%, 42%. So I've done 10, 12, and 14% revenue growth over the next 10 years. And take a look at this, guys. 10% revenue growth. I kept the profit margins with a little bit of a haircut based off of the previous numbers. Same thing with free cash flow margin. Price of free cash flow, I've done low numbers. P ratio, I gave them a low PE, some of the low PE. Desired return, 13% return. And $379 is what this company comes out to be. That means that's what you would have to pay today to assume a 13% return. Understand that, folks? $379 is what you would have to pay today to assume a 13% return. It's currently at $130. Now I can lower these revenue growth numbers by an incredible amount. So let's see how low we can actually get. Let's go 4, 5, and 6% revenue growth. Just let's say they just absolutely don't do anything. Their revenue is at a snail's pace. And let's see. Take a look at that. Take a look at that. 192. And this might be a more honest more honest outlook. Because look, 4, 5, and 6% revenue growth, assuming we are in a recession, assuming they miss their earnings, assuming just inflation being as high as it is, this might be more accurate. But take a look at that. It is in a bargain territory. So what is the message of this video? I'm going to follow up on Wednesday and see what Facebook does. But I am not concerned of how this company is going to do on earnings. If to be honest, obviously I want them to do well on their earnings. However, with that brings more euphoria, right? And people are going to probably be buying the stock right, like raising the price up. So what I'm going to do personally, I'm going to probably stock up on this price because it's really good. And if they happen to miss earnings and it goes down, I'm going to be averaging down as well. That's my take on it. Obviously, this is just my opinion, not actual financial advice. So don't do what I do. Research is important. And that's why I have this phenomenal software, 7-day free trial. Follow the link in the description box below, and you can get your hands on this amazing tool that you can research any company across any market, as well as we have the latest news, so on and so forth. Anyways, guys, that's the video. I hope you have a great day, and we'll talk about this on Wednesday. So take it easy.